So very good evening all of you. My voice is audible, screen visible properly. Okay. So we are going to continue that PGBP section 35 which we started yesterday. Okay. So today we are going to finish with section 35 and 35 AD. Okay. See, section 35 says that two parts are there in section 35. One is expenditure and second one is donations. First, we are going to discuss number one, expenditure. Incurred on scientific research. So, this scientific research must be related to the business of the assessee. So, scientific research which is related to the business of the assessee. In that scientific research, some expenditure is happening. Now, what type of expenditure can happen? The expenditure can be revenue also, revenue expenditure, and it can be capital expenditure. But the capital expenditure other than land. What did I say? Other than land. That capital expenditure will be allowed. The revenue expenditure which was incurred pre-commencement, post-commencement. Capital expenditure also incurred pre-commencement, post-commencement. Pre-commencement means what? The expenditure which was incurred, it was incurred within 3 years, immediately preceding to date of commencement of business. So the date on which the business is commenced, immediately prior to this date, 3 years immediately prior to this date, within those 3 years, whatever expenditure happened, whether revenue or capital, that is known as pre-commencement expenditure. Getting my point? So pre-commencement means what? Within 3 years. Within 3 years. So any pre-commencement revenue expenditure will be allowed fully, 100% allowed. As per section 35 subsection 1 clause 1. And this will be allowed in the previous year in which business is commenced. So the year in which the business is commenced, in that year, this expenditure will be allowed, assuming that the expenditure belongs to the year of commencement only. But it has to be incurred within 3 years immediately prior to date of commencement. Okay. Any post commencement expenditure, that also will be fully allowed. That will also be fully allowed. Post commencement can also be fully allowed, but it will be allowed in the previous year in which it is actually incurred. So the year in which you are incurring that expenditure, the year in that year it will be allowed as a deduction. Sure. What type of expenditure? Revenue expenditure. Now what are the revenue expenditure which can happen on your scientific research? For example, you are doing a business. In your business, some research work you are doing, that is for the purpose of your business only. Big pharma companies, big IT companies, they, usually they conduct some different types of researches, no? Automobile companies and all. So whatever research you are doing, it is for your business only. But in that research, you are doing a revenue expenditure. What type of expenditure are these? Revenue means frequently happening on a regular basis. Okay. For example, cost of materials, research materials, salary, etc. to research staff. That a lab will be, there will be a lab where the research will be conducted. So the running expenses of that lab also. So there are many expenses which might happen while you are doing the research. But those expenses are happening on a regular basis, then they are revenue expenditure, they are fully allowed. So the year in which the business is commenced, in that year, whatever revenue expenditure you have incurred within 3 years prior to the date of commencement, that will also be allowed. And after the business is commenced, then also whatever revenue expenditure you are incurring, that also will be fully allowed. But the post commencement expenditures will be allowed in the year in which they are actually incurred. Same to same, copy and paste for capital expenditure also. Meaning that I'm not going to write down like this. Now please pay attention. I will go and connect this here. Meaning that whatever pre-commencement capital expenditure are there must be incurred within 3 years. Yes or no? Prior to commencement of business. Even those capital expenditure will be fully allowed. But these capital expenditures will be allowed under section 35, subsection 1, clause 4. Read with section 35, 2. So for revenue expenditure, clause 1 is there. And for capital expenditure, clause 35, subsection 1, clause 4 is there. Read with 35, 2. Done, sir? What capital expenditure, sir? You are buying some assets for research purpose. There might be some research equipments, buildings, okay, any furniture, etc. Meaning whatever, any asset which you are buying and will be used for scientific research only. Yes or no? But the asset should not be land, other than land. So whatever actual cost of that asset will be there, whatever capital expenditure which you have incurred, even that entire amount will be allowed fully. Getting my point? Either pre-commencement or post-commencement. Done. This part done. Now, they are saying that if assessee is engaged in manufacturing business or business of biotechnology business, manufacturing of any article other than Schedule 11 goods. You are not in the manufacturing of Schedule 11 goods. So other than Schedule 11 goods, you are manufacturing any article or you are in the biotechnology business. Okay. And this assessee must also be a company. This assessee must also be a company. Then, even this company which has incurred expenditure on in-house scientific research. In-house scientific research means the research in its own labs, or it can be in approved laboratories also. If you are not having your own lab, but you are getting your research done in some approved labs, then also it is known as what? In-house research. Okay, in-house means you are doing that research on your own, either in your own lab or you are getting it done through some outside laboratory, but it should be approved. You are getting that research done for yourself in some outside library. In outside laboratory. But that laboratory should be approved. Now, any expenditure done for that in-house scientific research, whether that expenditure is revenue or it is capital. If it is capital, then other than land and building. Other than land and building. Meaning you have to buy any asset other than land, other than building. So whatever revenue expenditure incurred, 100%. Whatever capital expenditure incurred, 100%. 100% allowed under section 35 2AB and 100% allowed under section 35 2AB. It will be allowed in the previous year in which it is incurred. Previous year in which it is incurred, meaning that they are talking about post commencement revenue and capital expenditure. Getting my point? So the year in which it will be incurred, in that year it will be allowed. Now pay attention. Cost of building will be allowed or will not be allowed? Will not be allowed. So wait, this 35 2AB is available to an assessee who is a company. Now what about this 35.1.1 and 35.1.4? To whom this is allowed? This expenditure, whether revenue or capital, is allowed to any person. Any person means all assessees, including that company for which we were talking right now. Even this company can also claim this deduction. Getting my point? So what will happen now? This company will claim revenue expenditure, post commencement revenue expenditure here, post commencement capital expenditure here, other than cost of land and building. But do you see this thing? Post commencement building, expenditure on building. This company will go and claim this under section 35.1.4 here. The company will go and claim it here. Getting my point? Because this deduction is available to all the assessees, no? Getting my point? See, earlier what used to happen, 5 years back, this 35 2AB deduction was there, no? Instead of this 100%, there used to be a deduction of 150%. 150% for such type of companies doing such type of business. Getting my point? So this company used to claim 150% of revenue expenditure, 150% of capital expenditure other than cost of land and building. So all the assets, whatever capital expenditure is incurred, 150% of that is allowed here. But what about the building? The building 150% cannot be claimed here. So what this company used to do, that company used to claim the cost of building here. Because this deduction is available to everyone, no? Including that company which is covered by 35(2)(ab). Getting my point? So building, the cost of that building, entire cost also was allowed. But it was allowed here under section 35(1)(4). And can you see, only the expenditures incurred after commencement of business are allowed here. What about this company? What about this company would have incurred the cost of, the company would have incurred revenue expenditure or capital expenditure other than cost of land, and it was prior to commencement of business. For that 150% was not allowed. But that used to be claimed here. Pre-commencement, pre-commencement. Pre-commencement revenue expenditure was also allowed and pre-commencement capital expenditure was also allowed fully. But which was incurred within 3 years prior to commencement. Getting my point? So what used to happen, see, I'll tell you, I'll make a table. Okay. In that table I will write down about the assessee. Assessee is company doing what type of business? Manufacturing business other than Schedule 11 items. Schedule 11 is what, you know? Sin goods like tobacco, alcohol, BD, cigarette, gutka and all. Okay. These are known as sin goods whose names are written in Schedule 11. Other than Schedule 11 goods, any other goods you manufacture. Okay. And either the company is in biotech business. This is assessee, or all other assessees. Yes or no? Now what I will do? I will write down revenue expenditure. And I will write down revenue expenditure pre, within 3 years, or post. And I will write down capital expenditure pre, within 3 years, or post. See what this company used to do, you know, when there was 150% deduction, no, for post commencement revenue and capital expenditures, 150% used to be there. That time this company used to claim all the post commencement revenue expenditure under section 35(2)(ab), because it was 150%, no, and all the post commencement expenditures under section 35(2)(ab other than land and building. But the post commencement building they used to claim under, for building they used to claim 35(1)(4), fully allowed under 35(1)(4). Yes or no? For pre-commencement expenditures they used to claim 35(1)(4) and 35(1)(1) and 35(1)(4), meaning that 100%. Getting my point? 150%, 150%, and the building they used to claim 100%. Getting my point? But all other assessees, they used to claim 35-1, 1, either pre-commencement or post-commencement, 35-1, 4, either pre-commencement or post-commencement, excluding land. Getting my point? But now, no, this bifurcation is no more relevant, you know. Why? Because everywhere, in any section you go, whether you are this company or any other assessee, how much is the total amount of deduction available? 100% only, no? So now this bifurcation, no, which used to happen earlier, is no more of any relevance. You are any assessee? Any assessee? Have you incurred any revenue expenditure? Pre-commencement? Claim that also fully. Have you incurred any pre-commencement capital expenditure other than land? Yes, claim it fully. Even if it is building, even if it is the cost of building incurred by this company, that is also fully allowed. No, see, that is also fully allowed. And whatever post-commencement expenditures are there, they are also fully allowed. Whether you talk about 35-2AB or you talk about 35-1-4. So it will not make any difference now. Simple, don't remember these clauses, you know, don't remember these clauses. Can you just remember section 35? Section 35, that's it. Any assessee, whether the assessee is this company or any other assessee, if that assessee has incurred expenditure, revenue nature or capital nature for the purpose of scientific research related to its business, that entire expenditure is allowed as a deduction. Hello? In the year in which that revenue expenditure is incurred or capital expenditure is incurred. Capital expenditure other than land. That's it. If a revenue or capital expenditure is incurred prior to commencement of business, within 3 years prior to commencement of business, all those revenue and capital expenditure are also allowed. Other than cost of land. Yes or no? But it will be allowed in the year in which the business is commenced. You have to remember only this much. Earlier, when there used to be percentage, you know, 150% for this expense, 125% for this donation, 175% for this donation, then there was a problem. 5 years back, this section was very charming section because weighted deduction was given. Now only weight is what? 100%, fully allowed. That's it. No more deduction. So whatever expenditure is incurred, claim it as a deduction. That's it. Now tell me, even the capital expenditures are allowed, no? Even the capital expenditure other than cost of land is allowed. Whether the capital expenditure is allowed under 35-2AB or section 35-1-4. But under section 35, the capital expenditure is allowed, no? Meaning the cost of land is allowed, no? So few things which you are supposed to remember, which are very important. Any capital expenditure, meaning what? Actual cost of asset, yes or no? Other than cost of land, that capital expenditure which is allowed under section 35. This is already allowed under section 35. You are saying that I am purchasing this asset for the purpose of scientific research and the actual cost of that entire asset you have claimed as a deduction under section 35. Entire cost is allowed, no? Now, can you claim that cost in the form of depreciation anymore? Can you claim that cost under any other section? The answer is no. Now, the cost which was actually allowed as a deduction under section 35 because the asset was used for scientific research, that cost cannot be claimed under other provisions. On that, depreciation also cannot be claimed. Because if that is done, you are taking double deduction for a single amount, no? Getting my point? So you're claiming here, then don't claim anywhere else under any other section or not even in the form of depreciation. Got it, sir? This one important point is there. Now see, the capital expenditure which you have incurred, meaning the actual cost, yes or no? That is allowed under section 35. But do you remember for this actual cost which we did yesterday, we had done a discussion that proviso to section 43(1). Do you remember? Yesterday only we have done this proviso. Under this proviso, we had discussed that any cost of the asset, actual cost of the asset, you are paying the actual cost of the asset, you are making the payment for that actual cost to a single person in a single day, and the payment is more than 10,000. Then the payment must be made by way of prescribed modes. But what if the actual cost paid in a day, amount of actual cost paid in a day to a person, if that actual cost amount which is paid in a day is more than 10,000 and you have paid it by way of any mode other than prescribed modes, then this proviso gets applicable, and that proviso says that such amount of actual cost which was more than 10,000, which was paid in a day, which was paid to a person, and the amount is more than 10,000 and it is paid by way of prescribed mode, no, other than prescribed mode, that amount will not be treated as actual cost. And if that amount is not treated as actual cost, can you claim that amount under section 35? The answer is no, because that amount is no more your actual cost only. Getting my point, everyone? So even that proviso to section 43(1) you have to see here for this actual cost. So can I say proviso to section 43(1) is also applicable? Yes, you have to see the applicability of this proviso. And if the proviso to 43(1) applies to actual cost, that much amount of actual cost cannot be claimed. Not even in the form of depreciation, not even under section 35. Will you remember this? Everyone, now pay attention. Yesterday, if you remember, we had this discussion. Do you remember? We had this discussion. I will write down the same amount. Same things here also. Same things, okay? For example, your business income is 10 lakh. Your business expense is 8 lakhs. So your business is giving you 2 lakh of profit. Now what if the depreciation is more than this profit? Then whatever balance amount will remain, that will not be your business loss, that will be unabsorbed depreciation. Yesterday only we have a discussion about this, yes or no? For example, the amount of depreciation here was 1,20,000. Possible or not possible? Possible, sir. So there is a profit of 80,000 still. Okay. Now you have capital expenditure. What do you have? Capital expenditure, as well as you have done revenue expenditure on scientific research. So if you have incurred scientific research expenditure of what nature? Revenue nature. Of what nature? Revenue nature. Those will be covered over here. Here, revenue expenditures will be covered. So those revenue expenditures are to be reduced along with your normal business expense. Yes or no? But what about the capital expenditure other than land? Where you will claim it? You have to claim it after the claim of depreciation. So any capital expenditure incurred, capital expenditure other than cost of land on the scientific research, you will be claiming after the claim of depreciation. So can I say 2 lakh rupees of capital expenditure incurred? That you will claim from here. This is what? This is capital expenditure on scientific research which you are claiming as per section 35. Now, can you see that after claiming this, the resulting amount can be positive also. That is your PGBP income, taxable profits. But it can be possible that the resulting amount is negative also. Like we are getting in this case. How much amount you are getting in this case? Negative 1,20,000. Now this negative 1,20,000 which you are getting, no friends, this you cannot call your business loss. Can you call this amount your business loss? No. Business is not giving you a loss. Business is rather giving you a profit of 2 lakh prior to claim of depreciation. After claiming depreciation also, there is 80,000 profit remaining. But that 80,000 profit which is remaining after claiming the depreciation is not sufficient to absorb your capital expenditure. So out of this 2 lakh, 1,20,000 of capital expenditure still remains. So that 1,20,000 of capital expenditure which still remains, which cannot be absorbed in this year's income, this year's profits, cannot be treated as your business loss. What you will call it? You will call it unabsorbed capital expenditure on scientific research. And what treatment you will give? The treatment which is same as, fill in the blanks. Treatment same as unabsorbed depreciation, which you give under section 32(2). What treatment you can give? Adjust it from any income of the current year except salary. Can you adjust against any business income? Yes. Can you adjust against income of any other head? Yes, except salary. But if it cannot be adjusted, then carry forward. After carry forward, in the subsequent year, any income of the subsequent year, meaning any business income, any income of any other head except salary, against that it can be adjusted. And the carry forward available is maximum how much? 8 years? No, indefinite period. Unabsorbed depreciation, indefinite. So the treatment which you used to give for unabsorbed depreciation, that same treatment you are supposed to give for unabsorbed capital expenditure on scientific research. Will you remember this, sir? Everyone? Should I move ahead? Perfect, sir. Now, sir, is it possible that in the same example you are having a business loss also, you are having unabsorbed depreciation also, you are having unabsorbed capital expenditure also? All the three figures in the same question possible? Yes, possible. Business income 10 lakhs. Business expenses 11 lakh. You are in loss of 1 lakh. That is your business loss. Now this 1,20,000 depreciation will be fully unabsorbed. And this 2 lakh rupees of capital expenditure will be fully unabsorbed. Yes or no? What it is, see, all the revenue nature expenditures, you claim first. But after claiming the revenue nature expenses, claim the cost of the assets later on. Claim the cost of those assets which are used in the normal business operations in the form of depreciation in small parts. But claim the cost of those assets which are used in scientific research fully. But that you claim after depreciation. First section 32 will come, then 35 is coming, no? Hello? So first claim the cost of those assets which are used in the normal business operations. But that cost will not be allowed fully. That cost will be allowed in the form of depreciation. Then claim that cost of those assets which are used in your business only, but for scientific research. Claim that entire cost of that asset, but after the claim of depreciation. Yes or no? So first unabsorbed depreciation will be there. Then after unabsorbed depreciation, there can be 2 lakh rupees of entire capital expenditure, unabsorbed also. What treatment will you give? The treatment which you are giving to unabsorbed depreciation, that same treatment you are supposed to give for unabsorbed capital expenditure on scientific research. Will you remember this much? So, sir, revenue expenditure, fully allowed. Capital expenditure, fully allowed. This deduction is available to all the assessees, all the assessees, any assessees who is incurring revenue or capital expenditure other than cost of land for the purpose of scientific research which is related to his own business. On that scientific research, whatever revenue and capital expenditure incurred, full amount will be allowed under section 35. But the expense should not be a capital expenditure on land. Expense should be revenue or any capital expenditure other than cost of land. Post commencement also allowed, pre commencement also allowed. Post commencement will be allowed fully in the year in which it is incurred, and pre commencement will be allowed fully in the year of commencement. But pre commencement means date of commencement of business, immediately prior to that, within 3 years. Whatever pre-commencement revenue as well as capital expenditure other than cost of land will also be allowed as a deduction. But while you are taking the deduction for capital expenditure, remember, if you are taking the deduction for capital expenditure under section 35 here, you cannot claim that cost. You cannot claim that capital expenditure under any other section, or you cannot claim it in the form of depreciation also. Otherwise, it will be double deduction. Number 2, whatever capital expenditure which you are claiming here, this capital expenditure, this actual cost will not include that actual cost which is paid in a day to a person by way of any mode other than prescribed mode, because that actual cost will not be treated as actual cost only. That capital expenditure will not be treated as capital expenditure only if it is more than 10,000 paid in a day to a person by way of any mode other than prescribed mode. Getting my point? And whatever capital expenditure you are claiming here, you will claim it only after the claim of depreciation. Only capital expenditure you will claim after the claim of depreciation. What about the revenue expenditure? Revenue expenditure will be allowed as a part of your normal business expense only. Sure. But after claiming revenue expenditure, you claim depreciation, then you claim capital expenditure on scientific research. But if the current year's profits are not sufficient to absorb capital expenditure of current year, whatever capital expenditure will remain, that will be known as unabsorbed capital expenditure on scientific research. The treatment will be same as that of unabsorbed depreciation. Will you remember this much? Sure, no? Now pay attention. One very important thing. Very important thing. See, assessee can be any person. Now that assessee has acquired asset for scientific research, acquired asset other than land, no? Other than land. Any asset acquired. So the actual cost, meaning the capital expenditure of that asset was 5 lakhs. Example, how much? 5 lakhs. So this entire capital expenditure was allowed under section 35. The deduction for this 5 lakh you have already claimed. Possible? Sure, sir? When did you take the deduction? You took the deduction in this year. For example, in this year, you claimed the deduction of 5 lakhs. Now what happens later on? Meaning after claiming deduction for this capital expenditure under section 35 for any year, in any later on, can I say such asset was used in business for any other purpose? Possible or not? So from scientific research, you have withdrawn that asset. That no, I don't want to use it for scientific research anymore. Now I'll bring that asset and I'll start using in my normal operations. Possible or not? Tell me. Is the asset leaving you or it is still with you? It's still with us. But earlier we were using it in the lab for the purpose of scientific research. We took that asset from the scientific research and now we are using it for other normal business operations. Yes or no? So now this asset will not have its own identity. Now this asset will come and form part of the block where such type of assets belong. Do you remember block we did? So for example, this was a plant and machinery which was used for scientific research. 5 lakh rupees of that plant and machinery was allowed. Or for example, this was a building which was used for scientific research. Hello, 5 lakh rupees was the cost of that building. This was considered separately. But till the time it was used for scientific research, it was considered separately. Now that you have brought this asset for your normal business operations, now this asset will not remain individual. Now this asset will be made part of the block. So in your business, along with your other assets which are used for normal operations, now this asset will also be used along with those assets in the normal operations. Yes or no? So where are your assets which are used for normal business operation? They are in the block. So you'll have to bring that asset to the block, meaning this asset will be an addition in the block. So what you will do during the previous year? During the previous year, you have some opening value of the block. In that you will add. Add what? Additions, new assets coming in the block which are going to be used for the purpose of your normal business operations. Yes or no? So this asset is coming in the block now as an addition. What will be the actual cost of this asset which you will add as an addition to the block? Come on, tell me. You all are supposed to give me the answers properly. Come on, tell me. I'm waiting for your answers. Come on, do it fast. WDV as on that day. Apply some mind, no? Apply some logic. Come on. Sir, the actual cost of that asset was 5 lakhs, no? Which was already allowed under section 35, no? Now, if you take any amount as the cost here, what will happen? That same amount is getting allowed for the second time, no? So, its actual cost shall be taken as what? Nil. In your business, you have acquired asset for this purpose? No. In your business, you are bringing an asset which was earlier acquired by you for your scientific research. Hello. Now from scientific research, you are retiring that asset from scientific research and you are bringing that asset in your business. So now in your business, whatever asset is used, you did not acquire for normal operations. You acquired for scientific research. And that asset you are bringing in your business. And now you are using that asset for your business. So here for this business, what cost you will take for this asset? You cannot take any cost because entire cost of that asset was allowed to you only under section 35. So now no cost of this asset remains to be allowed because it was already allowed under section 35. See, no. So do one thing, add this asset to the block. Add this asset to the block because this asset is now going to be used for normal operations of your business. So it has to be there in the block. Now the identity of the asset will be gone because it will form part of the block. Yes or no? But don't add any cost. Take the actual cost as nil because its entire cost we have already allowed under section 35. Hello, sir. Do you remember yesterday we did section 43 subsection 1 and few explanations under section 43.1 I discussed. In that explanation number 1, I left. I told that this explanation 1 I will teach you with section 35. Yes or no? What was that explanation number 1? This was explanation number 1. This is as per explanation number 1 to section 43.1, which says that in this specific situation, if the asset was brought in the business, if the asset which you are using in the business was not acquired for this business, normal operations, no, it was acquired for scientific research, and whose entire cost was already allowed as a deduction to you under section 35. Now that asset, whenever you will bring to the normal operations of your business, hello, that asset you will start using in your normal operations, of the business, what cost you will take for this asset? You will take its actual cost as nil. Explanation 1 to section 43.1 told that cost of this asset for your normal business operations, which is to be added to the block, will be taken as nil. Yes or no? Now the asset will be added to the block. Come on, tell me. Hello? Now what if this asset is sold? Will it be sold independently or it will be sold as a part of block now? Because it is already there in the block now. Now it will not be independently sold. Now whenever this asset is sold, its individuality is gone. Hello sir. Now it will be a deletion from the block. And against that deletion, whatever amount is coming, no, that amount will be adjusted out of the value of the block. Which we normally do. Hello sir. This asset will come to the block at what cost? 0. Identity gone. Now it is a part of the block. Now later on, if such asset was sold or transferred. So it will be transferred from the block only, no, where it now belongs. Yes or no? Then amount recovered on such transfer to be adjusted out of value of the block. To be adjusted out of the value of the block. As what? As deletions. Please don't charge that amount separately anywhere, okay? No. Rather, adjust that amount as deletions from the value of your block only. Why you are doing this? Because the asset loses its identity after it is made as a part of the block now. Getting my point, sir? Should I move ahead? Important point, they can ask you these kind of things in the exams. You have to remember this, all these things. Tax treatment and all. See, understanding the provision you are understanding. But how they will be asking you in the exam? They will frame a case study. That Mr. Rajesh is doing some scientific research. In that scientific research, he acquired one building whose cost was 5 lakhs. This building was acquired by him in 2022-23. In that year only, the entire 5 lakh was allowed to him as a deduction under section 35. Now that same building, Rajesh is bringing that building in the previous year 24-25. He is bringing that building to its normal business use. Whatever I have spoken, no, they will frame a case study on that only. Now what will be the actual cost which Rajesh should take for this asset to be added in the block in 24-25? As per explanation 1 to section 43.1, the actual cost of this asset shall be taken as nil. Getting my point? So it will be added to the block at what rate? Nil rate. Because its entire amount is already claimed as a deduction in 22-23 only under PGBP head under section 35. It was already allowed in 22-23. Now in 24-25, it is being brought in the normal business by Rajesh. So in the normal business, its actual cost will be taken as nil. Now it will be given in the question that Rajesh has further sold this same asset for rupees 3 lakhs. What will you do? Make it a part of block, and the asset which is part of the block coming in the block at nil cost, but now it is leaving the business, leaving the block, and how much money you are getting? 3 lakhs, no? So to the extent of that 3 lakh, reduce the value of the block. To that extent, depreciation will not be allowed. Getting my point? This point. So you'll write, Rajesh will have to adjust this amount recovered on sale of the asset from the value of the block where the asset now belongs to. So now the asset which was building, which belonged to block of building, depreciable at 10% rate. From that block of building block of building, deletions will be how much? 3 lakhs. That you are supposed to say. Getting my point, everyone? Sure, no? Now tell me. Now, if this asset which you acquired, its entire cost you have claimed as deduction also under section 35. Later on, this is transferred, meaning sold, without being used for any other purpose in the business. Possible or not possible? Tell me. Possible? You acquired it for scientific research. Now, are you bringing that asset to be used for any other purpose in the business? No. Now, from scientific research only, you are selling that asset. So, will this asset form part of your block? Will it lose its identity? No. It was earlier also independent asset. Now also it is independent asset because it is being sold as an independent asset. Hello? Without being used for any other purpose in the business from scientific research. You bought it for scientific research. Now you are selling it. You are selling it directly while using in scientific research. Yes or no? Did you bring that asset for any other purpose to be used in your business? Did you made it the part of your block? No. Sold independently. Here, in the first case, asset was not leaving you. From your scientific research, it was with you only, but it was used for your other normal business operations. Now, here the asset is leaving you. But without that asset coming to your block, it is leaving you from scientific research. Getting my point? In this case, what you will do? Any amount which was recovered is recovered out of this cost only, no? That cost only is recovered. The cost which was allowed as deduction under PGBP head. Against that, this recovery is made. So whatever recovery is made against that cost, to the extent of that cost, will be treated as your PGBP income. Deemed PGBP income. Because how much was the cost of the asset? 5 lakhs. Under which head? You claim that deduction. Under the head PGBP, you claim the deduction of 5 lakhs. So entire cost of the asset was claimed as a deduction under PGBP head, meaning that entire 5 lakhs cost was allowed as a deduction from PGBP income. 5 lakh rupees of PGBP income got reduced, no? When you took the deduction of that 5 lakhs, that time 5 lakh rupees of PGBP income got reduced. Now against that 5 lakh, whatever recovery you will make, no, that recovery should increase your PGBP income. Hello? So what if that 5 lakh worth of asset you are selling right now for 3 lakhs? That 3 lakh will be your deemed PGBP income because it is coming out of that 5 lakhs only which was allowed under PGBP head. Hello sir? Against that 5 lakh only this 3 lakh is coming. That 5 lakh was allowed under PGBP head. So against that whatever recovery happening, 3 lakh will be treated as your deemed PGBP. Hello sir, wait. What if you are selling the asset and you are receiving 5 lakhs? Entire 5 lakhs will be now deemed PGBP income. But what if you are selling the asset and you are getting 5 lakh 80,000? To the extent of 5 lakhs, it will be deemed PGBP. But any recovery over and above this 5 lakhs, which was allowed under PGBP, cannot be treated as your deemed PGBP. That will be treated as your capital gains. Because that 80,000 was not allowed under PGBP. How much was allowed? 5 lakh. So recovery to the extent of that 5 lakhs, selling price to the extent of that 5 lakhs only will be treated as deemed PGBP. Any selling price over and above that will be treated as what? Capital gains. Will you remember this? So tell me, amount recovered or actual cost allowed under section 35, whichever is lower, that lower amount will be treated as your deemed PGBP income under section 41.3. Yes or no? And any recovery over and above actual cost which was allowed under section 35. Any recovery which is over and above, meaning excess recovery over and above the cost which was allowed under section 35, will be treated as your capital gain. Will be treated as your capital gain. So what you will do? See, amount recovered was 3 lakhs. Actual amount allowed was 5 lakhs. 3 lakhs or 5 lakhs, whichever is lower. 3 lakhs, that will be your deemed PGBP. No capital gain will arise. Why? Because recovery is not more than cost allowed. Getting my point? Next one. If the amount recovered is 5 lakhs, then 5 lakhs amount recovered, or how much cost was allowed? 5 lakhs. 5 lakh or 5 lakh, whichever is lower, 5 lakhs. And there is no recovery over and above 5 lakhs. No capital gain will arise. What if the amount recovered was 5 lakh 80? 5 lakh 80 or 5 lakh, whichever is lower, 5 lakh will be now deemed PGBP income. And is there any recovery over and above 5 lakhs? Yes, 80,000 recovery was there. No, that will be treated as your capital gain. Sure, sir. Will you remember this thing or not? Tell me. You have completed the most difficult part of section 35, which apparently looks difficult but is not difficult because there are logics. If you learn these logics, if you understand the logics, you will remember all these things. Getting my point? Now you just have to see the case study. You just have to see the question. In that question, no, you are supposed to apply your mind a little bit. What? That whatever is given in the question, this resembles to the same example which sir gave while teaching what? Section 35. So you have to connect the provisions of section 35. Like this, whatever is happening in the example, whatever is happening in the case study, whatever is happening in the question, like this, have we seen any provision? You have to apply, you have to connect that. Okay, something which is happening in this question, something which is happening in this example, something which is happening in this case study, we have studied a concept like this in any provision. You have to connect that. If the dots are connected, no, only then you will recall the provision. And once the provision is recalled, what was written in that provision? You try to remember those things, try to recall. And now you are supposed to do these things, any of these things in the question, in the case study, in the example. Getting my point? This is the way in which the provisions are to be understood and applied. Applied and answers are written accordingly. Getting my point? Should I move ahead? This was expenditure first part of section 35. Now in your section 35, there is another part also. And that part is donations. Now see, here no, expenditure on scientific research. This first part I have already discussed the entire thing. Okay, the same notes I have sent you today also. Okay, take these notes as your reference. These are proper latest notes only, but I have written in very hasty manner. Okay, but this is complete PGBP is there in this. So whenever you are making your notes, no, take the reference of this. But wait, these notes were made for November, last November attempt, last January attempt, sorry, January 25 attempt. So that time the law was a little bit different. Okay, no? Almost the entire PGBP chapter is same, but there are 2 or 3 places where there are amendments. First amendment we have already done. What amendment was there? Come on, tell me. In PGBP we have already done one amendment. That amendment is, if you are in the business, of letting out properties, if you are in the business of letting out what? Properties. So whatever rent you are receiving by letting out that property used to be your PGBP income earlier. Now there is an amendment, explanation number 3 to section 28 inserted, and saying that this rent will not be your PGBP, it will be your house property income if this rent is coming from letting out residential properties. Other than residential property, if the commercial properties are there and you are in the business of letting out the commercial properties and the rent is coming, then it is still your PGBP, but not from residential properties. Do you remember this one amendment we have done? Now 2 more amendment will come. One will come in 36 subsection 1 clause 4a. The rate is 14% instead of 10% now. And another amendment will come in 40 clause b, where the book profit limits have been changed. These 3 places only, these notes are to be upgraded. That's it. Other than that, every damn single thing is same. So whenever you will see any such thing where there was an amendment, put that amendment here only. And take the reference of these notes and prepare your notes properly. Will you be able to do it? Sure. Don't ask me, huh? Sir, here you have written only 10%. You told in the class that it is 14%. Buddy, I have already explained. It is 14% only. In your notes, earlier till last year it was 14%. If I would have also made the upgraded note, I would have written 10%. I would have crossed, and on that I would have written 14% Finance Act 24 amendment. So that you only do know now. You're just supposed to put a cross and write down 14%. This is an amendment. So that this is, this directly comes in front of you. That okay, this time this is the amendment. The limits which are given in 40 clause B, I would have written the same limits. I would have crossed. And on those old limits, I would have written the new limits, which I was supposed to do, you are supposed to do now in the same notes. Getting my point? Understood? Now pay attention. This entire points we have done. Now tell me one thing. Did I tell you that when you are claiming the deduction for revenue or capital expenditure, do you see revenue or capital expenditure? Which cost is not allowed? Capital expenditure on land is not allowed, no? So what if under section 35, capital expenditure, meaning the actual cost of any asset is allowed. Any asset is allowed other than land. Yes or no? So can I say cost of building is allowed? Cost of plant and machinery allowed? Cost of computer? Cost of furniture? Everything. All the assets, but not the land. But what happens? No. We know that this happens. But assessee purchased or acquired land and building as a composite asset through a composite agreement. Possible? Land, building, both purchased together as a single asset under a composite agreement. Possible or not possible? Come on, tell me. Now, will you make the payment? Capital expenditure will be incurred. Now the capital expenditure which will be incurred against this composite agreement, purchase agreement, yes or no? That capital expenditure is nothing but actual cost only. But this is the actual cost of land as well as building. Now what you are supposed to do, out of this actual cost, out of the actual cost, the cost of building only can be allowed under section 35. But out of this actual cost, the cost of land cannot be claimed under section 35. But sir, how would I know that what was the cost of land? So this is nothing but the fair market value of the land that you have to consider. So whatever land and building you are buying, in that, what was the fair market value of the land, you have to consider that. So out of the actual cost, remove that fair market value of land, because that is treated in the actual cost, that amount will be treated as the cost of land. Remove that. Whatever balance will remain out of the actual cost, that will be the cost of your building, that will be allowed as a deduction. Getting my point? So these few things are important which you are supposed to remember. Pay attention. See, capital expenditure already done. This proviso will be applicable, already done. Land and building composite agreement, I just now told you this. See, the same thing I have told you. Okay. Now, the same thing I explained. Business loss will not arise. Unobserved capital expenditure on scientific research, that will arise. Yes or no? Then, asset which was used for scientific research, its actual cost will be allowed under section 35. But now later on transferred without being used for any other purpose. What will you do? Two parts we did, no. Left hand side, no. Right hand side part which we did. In that right hand side part, what? Amount received or amount of actual cost allowed, whichever is lower, that amount will be treated as your deemed PGBP. Hello sir. Any recovery over and above the cost will be your capital gain. Sure, no? Now what if that same asset which was used for scientific research, whose cost was allowed under section 35, that same asset is brought in your business for any other use. Now the asset is not leaving you, but it is coming out of scientific research and used for other business purposes. This I have already explained. What will be the actual cost which you are going to add in the block? As per explanation 1 to section 43(1), it will be taken as nil. Now whenever this asset will be later on sold, no, it will be sold from the block. And whatever amount which you are receiving on sale of the asset will be adjusted from the value of the block. No need to do any deemed PGBP like this. This you are going to do only from scientific research the asset is sold directly, independently, individually, not forming part of the block. Getting my point? But when it forms part of the block, it will be sold as the asset of the block. So whatever value will come, that will not be deemed PGBP. That value will be directly adjusted from the value of the block only. That much depreciation you cannot claim. Got it or no? Sure. Now, this was SSE is a company, manufacturing business, biotechnology business, everything I have explained. Done. Coming to the second part of the chapter, donations. Donations for scientific research or statistical research or research in social sciences. Now you are an assessee. You can be any person. You are making some donations or you are contributing money. To whom? To some approved institution, association, organization, college, university, IIT, etc. Yes or no? So these approved institutions, wait a second. These approved institutions are, what they are doing? They are conducting some research. What type of research they are conducting? They might be conducting any scientific research. They might be conducting any statistical research. they might be conducting any research in social sciences, because these institutions, associations or organizations are approved by the government to conduct such kind of research. See, have you heard about ISRO? Indian Space Research Organization. What it is? It is an approved institution, approved organization, approved association which conducts space research. Government has given the approval to conduct space research to whom? ISRO. Have you heard about Bhabha Atomic Research Center? The nuclear or atomic research happens in this institute, in this association or organization. Bhabha Atomic Research Organization. Nobody else can do research, nuclear research or atomic research other than this, because the government has given the approval to this institute. Scientific research is happening, no? Have you heard about Tata Institute of Social Sciences? Tatas have made one institute, which institute conducts research in social sciences. There are statistical researches also happening. There are many institutes or organizations conducting statistical research. Unemployment, how much is the unemployment? How many females are there per how many males are there per 1,000 of the population? How many kids are there? What is the data of rainfall? What is the data of temperature? Many numbers. Data analysis. Statistics means what? Numbers, which gives some insights. So those statistical research also is done. Now who performs these researches? Come on, tell me. There are certain institutes, organizations, associations, colleges, universities, IITs, etc., which are approved by the government to conduct such type of researches. Now they are usually funded by the government. Government usually gives them funds to conduct their researches. But sometimes the government cannot give them enough amount of fund. So what the government does? The government asks the common man that if you also want, you can also contribute. If you also want, you can also donate. See, we are funding these institutes for scientific research, statistical research, etc. But if you also want, since sometimes what happens that the government does not have enough money to fund them, so their research should not stop. Okay, no? So common man or businessman or big business houses, the government will ask them to help these institute. That we show some generosity and give some donations to these institute. We are giving, you also please contribute. But the businessman will not contribute without any return. Businessman would say, I will contribute, but the amount is spent by me. So can you give me deduction for that amount in PGBP? Government said, okay, take. Even though it is not your business expense, even though the scientific research which is performed by them may or may not be related to your business. Getting my point? But since you are helping the government to fund these kind of institutes or associations, the government is going to give you some benefit. What benefit? Even though this donation is your expense, but it is not, it may or may not be related to a research which is related to your business. Still, go and take the amount as a deduction from your PGBP income only. Earlier, 125%, 150%, 175%, 200% of the amount donated used to be allowed as a deduction. Not now, earlier, 5 years back. Now what? Whatever amount donated, fully allowed. That's it. Now, if the donation is made to that approved institution, for scientific research, then also fully allowed. The donation is made for statistical research or research in social sciences, then also fully allowed. Don't remember the clauses, no? Hello, sir. So, if the donation is made for scientific research program, specific program, then also 100%. And if you are making the donation for scientific research, but not for a specific program, you are giving a general donation. That amount can be used by the institute for any scientific research program, yes or no? Then also 100%. Earlier, this used to be 200% for a specific program. For example, ISRO is there, no? ISRO is having a project. ISRO is having a program, Chandrayaan program. So you want to specifically contribute in the Chandrayaan program, tell ISRO that your donation is for scientific research, space research happening for that Chandrayaan project. The amount which you will give like this will qualify under 35 to AA. 200% will be allowed. 2AA means 200%. But what if you give 5 lakh rupees to ISRO saying that use this for your research? So now it can be used for any program. Hello, general donation. It used to be covered here. Earlier it used to be allowed to the extent of 150%, 175%. Yes or no? Now what? 100%. Even for a specific program also 100%. And general also 100%. So why are you remembering the clauses and everything? Just remember section 35, fully allowed. That's it. Understanding? Earlier, whenever you used to make the donations for what? For those institutes conducting what? Statistical research or research in social sciences. So those donations made to such type of institutes to conduct this type of research used to get allowed under 35(1)(3), 125%. But now what? 100%. Getting my point? Hello, sir. So wait. Donation for scientific research, fully allowed. Whether for a specific program or generally. Donations for any statistical research or research in social sciences, fully allowed. Now, the donation is made for a research. It can be scientific research, statistical research, or research in social science. This research may or may not be related to your business. Still, you are going to get this deduction. And most important, the amount you are donating, no, that donation is made to that institution, that association, that organization, that college, university, IIT, which is approved as on the date on which you are making that donation. On that date of donation, it must be approved by the government. See, these organizations also have to fulfill certain conditions to keep their approval in effect. Yes or no? If they contravene any condition for approval, the government takes back their approval also. Government cancels, government withdraws their approval. So what happened? No, you gave one donation to an institution. At the time when you gave the donation, no, at that time the institution was approved. But after you gave the donation, something might have happened. That institute might not have fulfilled a specific condition. So the government withdraws the approval given to that institution. But that withdrawal happened after you made the donation. Now the approval is no more. Now in the assessment year, when you are going to claim that deduction, no, your assessing officer is saying no deduction will be allowed. Why? Because you are coming to claim the deduction right now, and right now this institute is not approved. Approval is cancelled. Can he say so? No. You are going to tell him, bro, right now I am coming to claim the deduction. In the assessment year, I am coming to claim the deduction. Right now, even I know that the approval is withdrawn. But bro, when I donated, no, at that time, it was an approved institution only. So even if later on, after I make the donation, later on the approval was withdrawn, no, you cannot deny deduction to me. Deduction you will have to give me. Getting my point? Because This section says that the donation is made to approved institution, meaning that at the time when I am making the donation, at that time it should be approved. And at that time it was actually approved, I'm going to get the deduction. Later on, even if the approval of this institute is what? Withdrawn, it will not affect my deduction. I will still get the deduction. Getting my point, sir? Hello, sir. Pay attention. See, research conducted by approved institution may or may not be related to the business of the associate. I have already told you. And institution etc. must be approved as on date of making the donation. As on date of making the donation. Deduction under section 35 cannot be denied merely because the approval of such institution was withdrawn after the donation is made. On this basis, the deduction cannot be denied. You will be still getting the deduction. Understanding? Now, one more point is there. See, you are an assessee. Now you are making donation to any Indian company. Whom are you making donation to? Any Indian company you are donating the money. Now that Indian company, no, its main business as per the object clause, MOA, object clause, main business of that Indian company was to conduct scientific research and development. The best example of this company is Bharat Biotech. What is the main business of that company? Conducting scientific research and development. Yes or no? There are many companies. You might have heard about Godrej Agrovet that conducts scientific research in the field of agriculture. There are many companies like that. Different scientific researches are happening. But not necessarily that all the researches will be done by approved institutes, colleges, universities, etc. We will have to what? We will have to involve the private players also to come and participate in research. So now few scientists, they came together, few persons having a good background of science, they came together and they formed one company. Under this company, what are they going to do, They are going to conduct scientific research only. These people are mad scientists. They met and they are now involved into what? Scientific research and all. They'll be doing different type of scientific research. Some new inventions they will do. And those inventions, they will get them patented on their name. Now those patents, they will give to someone for use. And by the use of those patents, they will be earning royalty. That will be the main business income. Understanding? But this company can do such type of research. And the company will be doing that research. Hello? The government should give the approval to the company to do such research, scientific research. So whenever you are applying for a company registration, company formation, in the main object clause, if you are writing that your object is to, the company's object will be to conduct scientific research and development, new inventions to be made, and they will be patented, and we'll sell these patents or will allow the use of these patents to someone to earn our main business income in the form of what? Royalty. That time only you have to apply specifically for what? To get the approval that on the name of this company, now we are going to do this type of research. Government, please allow us to do. So once the company is formed, at the time of formation only this approval is taken. Now whatever approval is taken, allowing the company to do this research. Who has given the approval? Government. Now the government also knows that this private company is also doing a specific type of scientific research. So like other institutes are funded by us, no, let us fund these type of companies also. So these companies will apply to the government. That government, for our research, please give us also some money, no? So likewise, the government will allocate some money to them also for their research, etc. And why the government will be doing? Because private companies must be formed to do such type of researches. Because we are heavily relying on the research from outside India. In India, no. Whatever things, whatever scientific research we are using is not indigenous. That is imported. We use the research of others, which is done outside India. We use that research in India in different sectors. And for that, we have to pay huge amount of royalties outside India. And that royalty goes out in the form of foreign currency. Getting my point? So that is draining foreign currency. And also our talent pool doesn't stay here. It goes away. So we should promote these type of companies. So how they will be promoted? We will fund them. Along with that, we'll tell others also to contribute to such companies. Getting my point? So if any assessee will contribute to such Indian companies, that assessee should be given some benefit in the form of deduction. Only then that assessee will come and donate to such companies. Getting my point? Earlier, there used to be good percentage for this. Right now, 100%. The entire amount donated to such companies will be allowed as a deduction. Even if it is donated to these Indian companies and not approved institution, still the amount will be allowed as a deduction under Section 35. Will you remember this? Sure, everyone. Section 35 done. Now, if I would have wanted, I would have made a small table. Allowed, not allowed, 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 not allowed, not allowed. That's it. I would have gone. But you would not have understood this section holistically. You would have just thought, okay, this is also allowed, this is also allowed, this is also allowed, this is. But you would not have got this much understanding of the section. Now you have got the full understanding. Now you have to remember what? Only the tax treatment part. Expenditure done, then also allowed. Donation done, then also allowed. That's it. But while claiming this deduction, there are certain small things which you are supposed to keep in mind, which we have discussed in very detail. Okay. Now we'll solve one question and see whatever we have studied, we know or not. But wait, one simple thing I'll tell you. If you are spending money as an expenditure for scientific research, which is related to your business, whether you follow 115 BSc or you don't follow 115 BSc, that deduction is allowed. That will not be delayed. But if you are donating for scientific research or statistical research or research in social sciences, the donations part, I mean to say this part, this second part of section 35, this deduction for donations will be available only if you are shifting out of 115 BSc. Meaning that if you are following 115 BSc, if you are staying in what regime? Default tax regime. You are following 115 BSc, then this entire part becomes irrelevant for you. Nothing is applicable. Meaning this deduction will not be available to you. Ignore this deduction. Without taking this deduction, calculate your PGBP income. Getting my point? Will you remember? So let's move on to the questions. Come to question number 5 or 6 if I'm not wrong. Wait, Till 4 we have done yesterday, no? Till question number 4. Illustration number 5. Illustration number 5. Mr. A furnishes the following particulars for the previous year 24-25. Compute the deduction allowable under section 35. You are just supposed to calculate that deduction. How much amount will be allowed as a deduction from your business income under section 35. Next one. Okay, he's following 115 BSc and he is not following 115 BSc. Okay, no? So what we are going to do, here we are going to write if he is not following 115 BSE, and here we are writing if he is following 115 BAC. Now look at the first expense. Amount paid to notified approved Indian Institute of Science, Bangalore for scientific research. Scientific research donation is made. Approved institution, scientific research donation is made. Donation will be allowed as a deduction if you don't follow 115 BSc. But if you follow 115 BSc, this 1 lakh rupees of donation will not be allowed. Yes or no? Now next one. Amount paid to IIT Delhi for an approved scientific research program. Even IITs are approved to conduct certain, scientific research programs and all. So if the amount is donated to IIT also, it will be allowed as a deduction. But if you are not following 115 BSc, if you are following 115 BSc, then this will also not be allowed because this is a donation. Okay, next one. Amount paid to X Limited. X Limited is a company which is registered in India, Indian company, which has as its main object scientific research and development. Scientific R&D is the main object of this company. Any Indian company with a main object of conducting scientific research and development, to that Indian company also, if you are making a donation, that donation will be available as a deduction. But if you are following 115 BSc, then it will not be available. Then next one. Now you have incurred certain expenditures on in-house scientific research as approved by the prescribed authority related to his business. Now all the scientific research which you are doing in-house was related to your business. On that in-house scientific research, you are doing such expenditures. What expenditure you are doing? Revenue expenditure you are incurring. Will it be allowed? Yes. And even if you are following 115 BSc, still it will be allowed. Yes or no? Capital expenditure allowed? Yes, sir. Capital expenditure will be allowed, but it will be excluding cost of land. So, land and building total is 7,50,000. How much is the value of the land? Cost of acquisition of land is 5 lakh. So, that will be reduced. How much will remain? 2,50,000. That 250 will be allowed. It will be allowed. Capital expenditure on scientific research will also be allowed. Revenue expenditure on scientific research will also be allowed under both the regimes. Whether you follow 115 BSc or you don't follow 115 BSc. Done? Now you are supposed to add all these amounts. 1 lakh plus 2 lakh 50 plus 4 lakh will give you 7 lakh 50. 7 lakh 50 plus 2 lakh 50 will give you 10 lakh. 10 lakh plus 3 lakh will give you 13 lakh. Meaning that if you don't follow 115 BSc, your deduction will be 13 lakhs. And if you follow 115 BSc, your total deduction will be only 3 lakh plus 2 lakh 50. Hello? 5 lakh 50. Now whatever you have done, ticks on cross, no. You are just supposed to present it. That's it. Simple. Assessee following 115 BSc, tick mark. Write down point number 1, point number 2, point number 3. In the amount column, nil, nil, nil. In the bracket, you will write down not allowed donations for scientific research, statistical research, research in social sciences are not allowed as a deduction because the assessee is following 115 BSc. Nil, nil, nil. Then write down expenditure. Both the expenditure you write down the amount. Make the total. 5 lakh 50. Total deduction under section 35. Same to same format, copy and paste. 115 BSc not followed. Donation, donation, donation. Amount, amount, amount. Done. Expenditure, expenditure. Amount, amount. Total 13 lakh. Done. In particulars, what you will write? The same thing which is given here in particulars, you will write there also in the answer. Not at all difficult. Hello? Will you remember? Sure, no? Very good, sir. So this was one question. Okay. Now we will move on to our next part. Next section. Next section is 35AD. Very important section. Okay. Even this takes time to be finished, to be completed. We have to be very careful. See, I have told you that there are three types of businesses. One is speculation business. What is speculation business? I have already explained. Second is those businesses which are specified under section 35AD. So now we are into section 35AD. In this section, no, there are 15 businesses whose names are specified. How many businesses? 15 businesses whose names are specified under section 35AD. Now, which 15 businesses are there? Let's see. ICI study mat, page number 3.236. So I will write down ICAI study mat 2.3.236. No, 3.236. 3.236. I have deliberately not written the names of all those businesses. Okay, no, to save some space over here. So now, what are these businesses? Let us first go and check their names. Okay, which type of businesses are there? Then what section 35AD is talking about those businesses, then we will later on discuss. But first let us know that which businesses are covered under this section. Yes or no? What will happen for these businesses, that we are going to see. But what are these businesses? These businesses are, see, the list is given here. Okay. First is setting up and operating cold chain facility for specified products. For specified products, you are setting up and operating cold chain facilities. This is your business. Setting up and operating cold chain facility. Then setting up and operating warehousing facilities for storage of agricultural produce. And see, in the next point also, somewhere also one yes, here also, setting up and operating warehousing facility for storage of sugar. So two warehouse businesses. One, warehousing of agricultural produce. Second one is warehousing of sugar. Any other product warehousing? No. Only warehousing of agricultural produce or warehousing of sugar. So you are setting up and operating warehouses. For what? Agricultural produce or sugar. This is your business. You are running warehouses. Yes or no? Then next business is cross-country natural gas or crude oil or petroleum oil pipeline network. So you are laying and operating. You are laying and operating cross-country pipeline network for transportation of what? For transportation of natural gas, for crude oil, for petroleum oil. Yes or no? So your business is to lay and operate this type of pipeline network. Now, you can also have the business of laying and operating slurry pipeline for transportation of iron ore. Laying and operating the slurry pipeline for transportation of iron ore. Iron ore is converted into slurry, meaning mud. Okay. And then that mud with full pressure through these pipelines is transported from one location to another location. So the transportation becomes easy and huge transportation cost is saved. See, iron ore, no, there are mines. In the mines, iron ore will be extracted. Now that iron ore, what is the traditional method of transportation? Loaded on the trucks and transported from mines to factories, etc. Now somebody came with an idea. What? Ultimately, iron ore mines, there is a lot of, see, iron ore is from fine, that the iron ore mines are there, no? In the mines, the soil is there, no? Soil which contains iron. That is very fine soil. So in that soil, when the water is mixed, that becomes slurry. Thinner than the mud also. Mud is little bit thick, you know. Slurry is what? Slurry is mud only. But it is thinner than mud. That slurry. It is just like a liquid. Okay. Now, this liquid which is there, no, is nothing but iron ore. Soil only. Soil containing iron ore. But water mixed. Slurry is made. Now with full pressure through pipelines, vacuum pressures through pipelines, it is transported directly from mines to factories where iron will be extracted from that slurry. From that slurry will directly reach to the steel plant. It will be directly thrown into some hot, this thing, hot vessel, so that the entire water content gets evaporated and what remains is soil. Now in that soil, iron ore is there, that will be extracted. But this transportation through this pipeline, no, reduces wastages. Transportation is super fast and very effective also. Cost effective also. Getting my point? So people are coming with, see, these kind of ideas. Okay. For natural gas, crude oil also, the pipelines are, laid and they are operated. So just like natural gas, crude oil, etc., there is a pipeline network of slurry, iron ore slurry. So that pipeline also you are laying and you are maintaining that pipeline network. So one mine owner is there and one factory owner is there. From this mines to this factory, I will transport this entire iron ore, but through my network of pipeline. That pipeline network I will be laying from one mines to factory. I will be laying, I will be operating. For that I will be charging some money also. Getting my point? That is my business. Next one. See, hotel of 2-star or above category. Then hospital anywhere in India with at least 100 beds per patient. Hospital must be in India. Hotels must be in India. Getting my point? But hotels should have 2-star or more. 5-star hotel, very good. 4-star, no problem. 3-star, no problem. Good only. 2-star or above category. Hospitals. You are running hospitals which has minimum 100 beds of patient. Okay. Next one. You are into construction business. So you are constructing housing projects under slum redevelopment or rehabilitation schemes. Under a scheme of slum redevelopment and rehabilitation. You are a builder. You are in the construction business. Again you are building housing projects. But now these housing projects are under government scheme of affordable housing. So under the government's affordable housing scheme, you are constructing houses. Under the government's slum redevelopment schemes, you are constructing houses. You are into such business, yes or no? Or you are in the business of manufacturing fertilizers, production of fertilizers. Or you are running inland container depot or container freight station. Or you are in the business of beekeeping and production of honey and beeswax. Or you are having a semiconductor wafer fabrication manufacturing unit. Do you know that every damn single electrical item running on electricity have circuits, ICs. See, if I talk about this remote, no? In this remote, there is a green color board. That is what? Circuit board. In this keyboard also, there is a green color board. Circuit board. Whatever equipments you are having, whatever equipments, even in this small pen, when I'll break it, no, there will be a circuit inside this. Even in this, can you see this? This is what? This is, this we call as, what do you call? This is, I'm not exactly getting the name. All of a sudden I forget few words also sometimes. This is that speaker. So in the speaker also you will find that circuit board. In your mobile phone also you will find that circuit board. In the laptop also you will find circuit board. In this camera which I'm using, you will find that's every damn single thing you are having. You will find that circuit. That is known as semiconductor wafer. Nothing but circuit. So you are in the manufacturing of these type of circuit boards. You are having a manufacturing unit for these type of circuits. Okay, no, circuit boards. So that manufacturing unit is known as what? Wafer fabrication manufacturing unit. What do you call it? Wafer semiconductor wafer manufacturing unit. Semiconductor wafer manufacturing. This is nothing but a wafer. In technical terms, they call it a wafer. Circuit boards are there, no? These circuit boards are known as wafers for them. So you are into the manufacturing of this business. Then you are in the business of developing or maintaining and operating, or developing, maintaining and operating a new infrastructure facility. You are constructing highways, developing highways, metros, any new infrastructure facility you are developing, or you are maintaining, or you are operating, or you are developing, maintaining and operating. All the three things are done by you only. Either you are in the business of developing only, or you are in the business of maintaining only, or you are in the business of operating only, or you are in the business of developing, operating as well as maintaining. All the three things are done by you only. Getting my point? What you will do? You will construct a metro. Your job is, your business is just to construct, just to develop. Metro is new infrastructure facility. Or your business is just to maintain, repairs and all, maintenance, etc. Yes or no? Or your business is to run that metro smoothly, operations. Or you are in a business where you are developing also, you will maintain also, and you will operate also. Getting my point? Any new infrastructure facility. Now, did you see all these names? Hello? Besides that, I have to write one thing. Most important. All these names must be known to you. In the entire income tax, no, they are telling you not to remember many things, but at least few things we will expect you all to remember. So out of those few things, we want that you remember the names of these businesses. Yes or no? Now, see, this 35 AD came, no? So with this businesses, the names of businesses were specified. So earlier, when the first time this section came, no, in 2006 or 2005, if I'm not wrong, okay, that time, when first time this section came, no, 2-3 businesses were specified for section 35D. All the businesses were not there. Only 2-3 names of 2-3 businesses were specified earlier in the beginning. Okay, 2007, 1st April 2007. Meaning that if the operations of these 2-3 businesses have been started, commencement of the operations is done on or after this date, then these businesses which are specified here will get the benefit of section 35D. What if the operations of these businesses were already commenced prior to the specified date? Then 35D benefit will not be available. Though the businesses will be specified under section 35AD, but the benefit of section 35AD will not be available. Benefit will be available only if the operations of this business is started on or after the given date, on or after the specified date. So for some businesses, the date specified was 1st April 2007. For some of them, the date specified was 1st April 2009. For some of them, the date specified was 1st April 2010. Then again few businesses were inserted, name of the few businesses inserted, the date specified was 1st April 2012. Then again after 2-3 years, few more businesses were inserted, and with effect from 1st April 2014, the operations of these businesses commence. Likewise, till 1st April 2017, the oldest businesses here are cross-country natural gas pipeline, crude oil pipeline, slurry pipeline, etc. These are the oldest businesses. But the latest business whose name was inserted in section 35AD is this business. See, the name was inserted (2017). After 1st April 2017, no new business is added to this list. Till 2017, many businesses are included in 35AD. Few were included with effect from 1st April 2006. Then 1st April 2007, few were 1st April 2009, few were likewise till 2017. Now what they are saying, the dates they are mentioning. So they are writing the name of the business, and besides that they are writing these dates. Now what they are trying to tell you, please listen to me very carefully. If you are an assessee, you can be any person. If you are doing any of these businesses, these are the 15 businesses whose names are specified, okay, no? So as an assessee, you have to commence the operations of this business, fresh operations, new operations, entirely new business should be started, and the operations should be started for the first time for these businesses on or after the dates which are given. Meaning, specified dates given against every business name. So that business, operations of that business should start for the first time on or after the date specified. What if you are already doing this business prior to the specified date? That means the operations are already commenced prior to the date specified. The operations are already commenced. Yes or no, sir? For those businesses, the names are specified. But since their operations are already commenced prior to the prescribed dates, specified dates, for those businesses, 35AD benefit will not be available. Hello? 35AD benefit will be available only in the case of these businesses, if their operations are commenced on or after the prescribed or specified dates. Getting my point? But these dates are not written here. When you will see the earlier years, ICI study mat, no, you must be having Raj Lakshmi, the old ICI study mat. In that study mat, if you will see, no, these names are also given. Besides that, the dates are also given. But in this year's study mat, they have eliminated the dates also. And dates are not given, see. I am teaching you from ICI study mat only, no. So dates are not given. Don't worry. No problem also. Why, you know? Because the last business which was inserted here was 1st April 2017. After that, no business is there. For example, any business would be there. Its date of commencement of operation would be either 1st April 2017 or prior to that. So meaning that if in 24-25 you have commenced operations of what? A hotel of 2-star or above category. And for hotels, no, the date specified was 1st April 2010. On or after 1st April 2010, if the operations of this type of hotel are commenced, then the benefit of 35 AD will be available. So when are you commencing the operations? 24-25, which is on or after 1st April 2010 only, no? Hello, sir. Meaning if you are starting the operations right now in 24-25, previous year 24-25, meaning that any of the businesses, you see any of the businesses, the operations are commenced on or after their specified date only if they are commencing in 24-25. Getting my point? And it is not that much relevant. Don't worry. If the operations are commenced right now, no, 100% the operations are commenced on or after the specified date only. Because no date is coming in this year or the last year or the last to last year. All the dates. The latest date was 1st April 2017 when the last business got introduced here. That was developing, operating, maintaining or developing, operating and maintaining infrastructure facility. New infrastructure facility in India. So what if this last business you are starting right now, you are commencing the operations on or after the prescribed date only, no? What if, see, if I say hotel, for this, the date is 1st April 2012 and you are starting a hotel right now. Definitely you are commencing the operations on or after this prescribed specified date only, no? For some business, it is 1st April 2010, meaning that definitely you are starting what? So no need to remember these dates. Please don't worry. Don't bother yourself. Okay. Now what do I mean to tell you? Please understand this. See, assessee is there. He can be any person. And the assessee is engaged in any of the 15 businesses which are specified under section 35 AD, whose operations are commenced on or after specified dates, then for the above business, then for the above businesses, any capital expenditure, meaning actual cost of assets. Yes or no? Capital expenditure means what? Asset or bought. Actual cost of asset. Any capital expenditure meaning actual cost of assets. Which assets? Any asset other than land, goodwill or financial instruments. Land, goodwill, financial instruments, no. Other than these three, any asset you acquire for this business. Yes or no? That entire capital expenditure, 100% of such capital expenditure, or you can say actual cost of asset, shall be allowed as a deduction under this section, whether this capital expenditure is done prior to commencement of business or after the commencement of business will not make any difference. Sir, prior to commencement of business within how much time? Do you remember? Date of commencement immediately prior to that, within 3 years. That was applicable in scientific research, not here. Before the commencement of business, any time before the commencement of business. So pre-commencement, any time prior to commencement of operations. Yes or no? So operations are commenced on 1st June 2024. So prior to 1st June 24, whenever any capital expenditure is incurred, all such capital expenditures will be covered. Don't worry. Unlike that 3 years restriction, no, that 3 years restriction will not be applicable over here, which is applicable in scientific research capital expenditure, pre-commencement. Getting my point? Everyone, please wait. This will be allowed in the year in which the business is commenced, assuming that this is the capital expenditure incurred in the year of commencement. Same, no? Pre-commencement expenditure will be allowed in which year? The year in which the business is commenced. So can I say this pre-commencement expenditure will be allowed in the year of what? Commencement. But if you want to claim this in the year of commencement, then it must be capitalized in the books. Capitalized in books of accounts in the year of commencement. Simply I tell you, in the first year's balance sheet you have shown these assets. That's it. Meaning capitalized in the year of commencement. So whatever capital expenditure which you have incurred prior to commencement of business, we will allow all those capital expenditures also. Whenever done, we will allow that in the year of commencement only. But wait, to claim that in the year of commencement, those capital expenditure, those assets must be capitalized in your books. Meaning that those assets should be shown as your assets in the first year's balance sheet. Only then they can be claimed. Now whatever post commencement is there, come on, tell me. This. Post commencement will be allowed in the year of incurrence. Meaning the year in which they are incurred. In that year they will be allowed. Now do you remember this thing? Wait, this part you remember? 35 AD capital expenditure, hello, will be allowed. It will be allowed here or here. This will be treated as your normal business expense only. Claim it fully as your business expense only. Now that will result into a business loss. Claiming the capital expenditure as your business expense now will not result into unabsorbed amounts of capital. No, now it will result into your business loss of specified business. Getting my point? And this loss will be allowed as a deduction. Sorry, this loss will be allowed as a set off from any business income. No. Loss of specified business will be eligible as a set off only against profits of any other specified business only. Meaning that, do you have any other specified business? Yes. If that specified business has profit, no, from that profit, adjust the loss of this specified business. Because see, knowing that we are going to allow you the full amount of capital expenditure as your business expense only, there are bright chances in most of the case specified business will have a loss only, because business income will be this much and business expense along with the capital expenditure which is allowed under section 35D will be huge. This will eat your entire income and loss will be formed. Bright chances of this loss. And knowing that this business, in this business we are going to allow what? Capital expenditure as your expense only, business expense only. Hello? Knowing that it will result into losses only, we are not that mad that will give you the set off of this loss against those profits on which you are going to pay tax to us. Hello? We will not allow this loss to be set off against any other business profits. So do you have any other specified business? Tell me yes. We were thinking that from that business also there will be a loss only. But fortunately you got a profit. We were not expecting that the other specified business is going to give you a profit. So we were not anticipating a profit. So we were not anticipating tax on that profit. Getting my point? If you adjust this loss out of the profit of other specified business, no, will not feel bad. But just imagine how much bad we will feel knowing that a business which can give you a profit, on that you are supposed to pay tax. Entire income is gone by allowing you the set off of this loss against that business income. Getting my point? So we are not that mad people. The law says pay taxes on these normal profits. Okay? Don't adjust the type of losses against these normal profits, because these type of business are bound to give you losses only because of this deduction. If you have any other specified business, we were not expecting that the other specified business is going to give you profit. And if profit is coming, against that profit, if this loss is adjusted, anyways we were not expecting that profit to come. Hello sir. Take the set off from any other specified business profit, but not against any other business profits. Yes or no? Now wait, what will happen here, you know? Now I'll tell you. You have three businesses. Okay. Business A, business B, and business C. Okay. Now one is specified business. Business A is specified business. Yes. Business B is your speculation business. Which business? Speculation business. And business C is your normal business. Done, no? Wait, wait. I'm having a loss in this business. Come on. Can I adjust it from speculation business or normal business profits? The answer is no. Not possible. Not possible. Not possible. This loss cannot be adjusted against any other business profits. Sir, do I have a speculation business? Yes. From this business, I'm having a loss. Can I adjust this loss against this business or this business income? The answer is no. Speculation business loss can be adjusted against the profits of any other speculation business only. Getting my point? Now, can you have a loss here? There is no restriction. This can be set off from any business profits. Any other normal business profits also? Hello, sir. Any other speculation business also, from here also, from both the places it can be set off. Because that is a normal business. There is no restriction on that. Are you all understanding what I am trying to tell you all? Now pay attention, pay attention. See here. Now I have this business C, no? This business C is my This is also my specified business. Wait, I will give the name to these two businesses. Come on, tell me. This is my Hotel A in Mumbai. 3-star hotel. 2-star or above category. Yes or no? And this specified business C, this is also my hotel business. Hotel B, which I am running in Madurai. Possible? Madurai, I am having another Hotel B. This is also 2-star business. 2-star or above category is okay, no? Now tell me, Hotel business B, which is 2-star or above category, Hotel business A, 2 hotels I am running, means I am running 2 businesses, hotel businesses. This is also my hotel business. This is also my hotel business. I am having 2 businesses. Yes or no? 1 hotel, 2 hotel. 2 hotel businesses. Now, this hotel business, the operations were commenced on or after specified date. The operations were commenced. And this Madurai hotel is there, no? The operations were commenced prior to the specified date. For example, for hotel business, the date specified is 1st April 2010. Not 12, it is 10. Okay, example. So, 1st April 2010, meaning that Mumbai business, Mumbai hotel operations are commenced on or after 1st April 10. Will I get 35 AD deduction from Mumbai hotel business? Eligible for 35 AD? Yes or no? Here, this hotel business in Mumbai, the operations are commenced on or after the due date. Here, 35 AD deduction is available because the operations are commenced on or after the specified date. Now here no, Madurai hotel I started in 2002. Meaning the operations of Madurai hotel started long back prior to the specified date. Tell me, for this Madurai hotel business, will I be eligible to claim 35 AD deduction? No, I am not eligible. But tell me, business A is a specified business? Yes. Business C is a specified business? Yes. One specified business eligible for 35 AD deduction, another specified business not eligible for 35 AD deduction. Why? Because one is satisfying the conditions of 35 AD, another specified business, the name is given in section 35 AD, but section 35 AD conditions applicable to claim the deduction of 35 AD are not fulfilled. And one of that conditions is what? The operations must be commenced on or after prescribed date. That condition is not fulfilled. So, even though the name of this business is specified, even though the business is specified, for this 35 AD deduction is not available. Did you understand the story so far? Everyone? Now, in business A, no, hotel A, for which I am getting 35 AD deduction, in this I am having a loss. Can I have a loss here? Hello, sir. I am having a loss here. This loss can be adjusted against business B. Business B is a speculation business. What if business B was a normal business? So from business B, which can be either speculation business or a normal business, from business B forget. Because loss of a specified business can be adjusted only against the profit of any other specified business only. Yes or no? So if the business B is a speculation business or business B is a normal business, will not make any difference. Against that, this loss cannot be adjusted. Will you remember? Now tell me, here there was profit. Now listen to me very carefully. Huh? Can you set off this loss from this profit? This is a profit of that specified business for which you are not getting 35-day deduction. So loss of a specified business for which you are getting 35-day deduction, can that loss be adjusted against the profit of a specified business for which 35-day deduction was not available? Can I do it? Y for yes, N for no. Only one answer I have got so far. What others are doing? Okay. 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 One more remaining. Sir, what's your answer? Kaushik. Loss of any specified business can be set off against the profit of any specified business only. There is no requirement that the loss you are trying to set off against a specified business, for that business also you should be getting 35-day deduction. So for Madurai business, no, whether you are getting 35-day deduction or you are not going to get 35-day deduction is immaterial. Is it a specified business? Yes. And now for that business, whether you are getting 35-day deduction or not will not make any difference. Loss of specified business will be adjusted against the profit of any specified business. Getting my point? What if this loss is coming, this loss? Here it was loss and here it was profit. Can it be adjusted here? Yes. This is also yes. It is not required, no. That loss of a business, specified business for which no 35-day deduction was available cannot be adjusted against the profit of that business for which 35-day deduction is available. Loss of any specified business can be adjusted against the profit of any specified business only. Whether for these specified businesses 35-day deduction were available or not will not make any difference. But specified only against specified. Getting my point, everyone? Please be careful here. Okay, sir? Now pay attention. Now, this was the deduction. See what they are saying, that if you are an assessee engaged in any of these 15 businesses which are specified under section 35AD and you are supposed to commence the operation on or after specified date. Can I say this commencement of operation is the first condition? No. This is the second condition to claim deduction under section 35AD. First condition is business must be specified. Second condition is the operations are commenced on or after the prescribed date. Then only the capital expenditure incurred for these businesses other than cost of land, goodwill and financial instruments will be available at once. Hello? Then only you are eligible to get 35-day deduction. Wait, there are other conditions also. You have to fulfill all those conditions also if you want to claim this deduction. So what are the other conditions? That I am going to tell you now. Okay, no? The next condition is condition number 3. Books of accounts of such specified business separately maintained also, and these books of accounts must be audited from a responsible person also. Chartered accountant. He will tell you whether the books of this business which are separately maintained showing true or fair view or not. Whether the transactions are not manipulated, whether the books are not manipulated. We will not rely on you. Because see, this is a specified business, no? You are going to calculate the profit of this business, or you are going to calculate the loss of this business, and you are going to show that profit or loss to us. Hello? Huge amounts are involved. Capital expenditure. Just imagine laying cross country natural gas pipeline. How much cost will be involved to? How much huge money will be involved in setting up this business? How much huge amount of amount as will be involved as a capital expenditure on buying the assets? Incomes also you might be earning properly, very good incomes these businesses are giving. But are you suppressing the incomes in your books? Are you showing more expenses in your books? Because see, tomorrow when we have to check that whatever profit or loss you are showing from this business are correct or not. So we would require our books of accounts only, no? From where we will check that what are your business incomes from this business? What are the expenses which you are incurring on this business, including the capital expenditure? For that, we would require your books. So we will ask you that please provide your books. You will say books are not maintained. So from where we will come to know? How we will verify without your books? So your books must be compulsorily maintained. But that books for this business has to be separate, huh? All the other things you do separately. But for this specified business, the books must be maintained separately. Their transactions has to be recorded separately. Getting my point? And wait, you are going to maintain these books. So there are bright chances that you will manipulate the books in such a manner that even after taking those books from me, we are also going to get the same amount of profit or loss which you are going to show. Because you will manipulate the books in such a way, no? So your books are reliable. We can rely on the books provided by you for this business. Who will make sure that? A responsible person. Get it audited. Most important condition. This should also be satisfied. Okay. Now, next condition. The operations of such business. Third condition was this. This is fourth condition. Wait, before that, I'll write if for such business $10 AA or 80 IA to 80 RRB. These are known as Chapter 6A, Part C deductions. Yes or no? See, sometimes with regard to these businesses, you get deduction under 10AA also. Sometimes with regard to these businesses, you can get 80 IA to RRB also. Now see, you are doing one business. For that business, you are eligible to get deduction under 80 IA to RRB also. You are eligible to get the deduction under 35AD also. Now will you claim both? For the single business, if you are going to claim this benefit under section 35AD, for that same business, you cannot take 80 IA to RRB. Forget 80 IA to RRB. Or if you are taking 80 IA to RRB deduction for that business, yes or no, then forget 35AD. Both the deduction, both the benefit with regard to the same business cannot be allowed. For that same business, you are eligible to get 10AA deduction also. And for that same business, you are eligible to get 35AD deduction also. You cannot claim both. You have to sacrifice one, then only you will get one. So sacrifice 10AA, you will get 35AD. Sacrifice 35AD, you will get 10AA. Meaning, if for such business, 10AA or 80 RRB was available, was also available, then condition is that don't claim 10AA or 80 IA to 80 RRB. Only then for such business you are going to get 35AD deduction. If you are not claiming 35AD, claim 10AA. If you are not claiming 35AD, claim 80 IA to RRB for that business. But if you are claiming 10AA or 80 IA to RRB for that same business, you cannot claim 35AD in that business. Any one benefit you can take. Hello, sir. Getting my point? These are the conditions to claim 35AD. Okay. So this is the fourth condition. Now coming to the fifth condition. Coming to the fifth conditions. Operations of such business shall not be shall not be commenced with old plant and machinery. Whenever you want to start a new business, install new plant and machinery. Why are you starting the operation with old plant and machinery? No, old plant and machinery. Meaning that operations of such business shall commence. Operation of such business shall commence by installing what? New plant and machinery. Meaning, if you are installing old plant and machinery, is it allowed? Yes, allowed, up to maximum 20% of total investment in plant and machinery. Meaning that to start this business, what did I say? To start the business, total plant and machinery you acquired was 100 crores. First, we want that this entire 100 crores should be new. But asking you to buy the entire plant and machinery new will be too much. So we will allow old also, second hand also. But that should not be more than the second hand bought in this, the second hand plant and machinery bought and installed to commence the operations. In this, it should not be more than 20% of this. So, out of this, second hand plant and machinery was 40 crores. That means the new plant and machinery was how much? 60 crores. Tell me, out of the total investment in the plant and machinery, second hand, what is the maximum limit on second hand? Maximum 20% second hand can be there. Maximum 20% of 100 will be 20 CR. Hello? How much second hand you are buying to start the operations? 40 crores. Will you get any 35AD deduction for this business? No. That business is not eligible only to get 35AD because the operations itself are commenced with second hand plant and machinery, which is more than 20% of the total investment in the plant and machinery. Yes or no? Wait. Out of this 40, no? some is imported. Imported means second hand only, but was not used in India. It was used outside India by someone else, and you are importing from outside India. And for that plant and machinery, the person from whom you are buying, the cost of that plant and machinery was not allowed to him under the Income Tax Act. So you are buying from Mr. X, who is outside India. Mr. X was already using some plant and machinery, yes or no? So you are buying plant and machinery from Mr. X to Mr. X under the Income Tax Act 1961. No deduction was allowed for the plant and machinery to Mr. X, and he is outside India. From Mr. X, if you are purchasing, meaning this is second hand only. It was earlier used by some other person. Now you are using it. It is second hand. But is it imported? Is it coming from outside India? Yes or no? Any value is okay. That is allowed. But other than this imported second hand, the second hand plant and machinery should not be more than 20 crores. Hello, sir. Hello, sir. So, imported was 25 CR. Possible. Meaning that other than imported second hand was how much? Tell me. 15 CR. So now when you will compare, no, this 20 CR, don't compare with 40, compare with 15. Because in second hand, whatever imported second hand plant and machinery is there, no, that is okay. No problem in that. But other than imported, whatever second hand plant and machinery will be there, that cannot be more than 20% of the total investment in plant and machinery. So now tell me, now will you get 35-day deduction? The answer is yes. Because second hand is only 15 CR, which is less than 20. Getting my point? Now if I shuffle this, I'll take it here and I'll take it here. Now tell me, are you going to get 35D now? No, because the second hand, other than imported, can you see 25? Is it more than 20? Yes. Operations are commenced with second hand plant and machinery. Hello. Other than imported, which is more than 20 CR. Hence, this business is not eligible for 35-day deduction. Getting my point? Now they are saying the last one. This was your fifth, no? Now sixth one. Sixth condition. Business, specified business, shall not be formed by splitting up or reconstruction of existing business. If you are splitting up the existing business, starting a new business, or already an existing business continuing. For example, there is one company X Limited. X Limited is a company. Hello, wait. Pay attention here. X Limited is a company. X Limited is running two businesses, having two businesses. Hotel 1 and Hotel 2. Hotel 1 and Hotel 2. Hotel 1, Hotel 2, the operations are commenced. Hotel 1 operations are commenced in 2001-2. 2001-2. Hotel 2 operations you started in 2008-9. Both the operations started prior to the specified dates. Now, what happened? No, government meaning our government brought an amendment in section 35AD with effect from 1st April 2010 or after that. If the operations of 2-star or more category hotel is commenced, the assessee will get 35AD. 1st April 2010 date is given. Example, we are just taking example. This might not be the exact date, okay? The date can be 1st April 2012 also. But we are assuming that 1st April 2010, the date is given. Now tell me, have you already commenced the hotel operations, both the hotel operations prior to this date? Now what you do, now you got an idea. You formed two companies or one company only. X Limited, who was doing H1 and H2 business both. Now a new company started, Y Limited, new company. This was started on or after 1st April 2010. Now are you understanding why this is getting started? Now what will happen? No, the entire hotel business is transferred by way of amalgamation in this new company. X Limited got amalgamated with Y Limited. Now Y Limited will say, new company started on or after 1st April 2010, doing a hotel business of 2-star or more, eligible to get 35AD. 35 slabs you will get. In your new name, you are doing the already existing operations, no? What new hotel operations you have started? No new hotel. So the business is started by reorganizing the business already in existence. Hello? Y Limited is not going to get any deduction under 35AD. Getting my point? Amalgamation can happen. This is business reorganization. Or splitting up can also happen. For example, this business was, hotel 1 was 1-2, okay, no? And this was started in 2014-15. This was started in 14-15. So for this, you were getting 35AD, but for this, you were not getting 35AD. Yes or no? So what you did, from your X Limited, you did not amalgamate X Limited. What you did, you formed a new company, Y Limited, okay? So in Y Limited, this H1 for which you were not getting 35AD deduction, no? Y Limited, a new company was formed. This X Limited was transfers all the assets. Now this new company was formed on or after 1st April 2010, meaning that I have started this company in 2016-17. In 16-17, my hotel 1 business was transferred to Y Limited. What is this? This is not amalgamation. This is demerger. This is splitting up of the existing business. Now, after this thing will happen, no? X Limited will keep on doing hotel 2 business and claiming 35AD deduction. And Y Limited, to whom now hotel business 1 is transferred on demerger, splitting up. Now Y Limited will also try to claim what? 35AD. Saying that, see, we have been formed in 16-17, new business. You are a new business. But the business is started by splitting up the existing business only, no? So for this, 35AD deduction will not be available to us. If Y Limited wants, no, what Y Limited can do, after 16-17 Y Limited is formed. After 1st April 2010, meaning in 16-17 Y Limited is formed. Y Limited is starting hotel number 3 in 24-25. Come on. Hotel number 3. New business, new operations commenced. And commenced on or after 1st April 2010. For this hotel business, Y Limited can claim 35AD. But not for hotel number 1. because that was the business which was already in existence. On splitting up of the existing business, that business you started. Getting my point? Hello, sir. All these conditions you must keep in your mind. Okay, so all these conditions are given here. 35D, one by one. Assessee, any person, 15 business. Okay, what are the business? Names we have already seen. Operations of above business is commenced on or after specified dates. Then, for that business, whatever capital expenditure is incurred, other than these three capital expenditure, cost of land, cost of goodwill, cost of financial instruments, other than these three assets, any other asset bought prior to commencement of business, at any time prior to commencement of business, or after the commencement of business, whatever capital expenditure is done, that entire capital expenditure is allowed as a deduction. Post commencement will be allowed in the year in which it is incurred, and pre commencement will be allowed in the year in which the business is commenced, provided that pre commencement expenditures, capital expenditures, are capitalized in your books. Getting my point? Now, the capital expenditure which you are claiming here, can you claim this under any other section? Or can you claim it in the form of depreciation? That goes without saying. This is a common sense, guys. Because we are allowing the entire capital expenditure as your business expense only under section 35AD. Now you are coming to claim that under any other section. Wow. You are trying to claim depreciation on that. Wow. Come, will not give you. Because the entire cost we have allowed under section 35AD only, no? So the entire cost of the asset, entire capital expenditure, which is already allowed under section 35D, cannot be claimed under any other section of the Income Tax Act, or it cannot be claimed in the form of depreciation also. You have to remember. Do you remember the proviso to section 43(1)? Actual cost of the asset, meaning the capital expenditure is allowed under section 35D. That amount of actual cost will not be treated as actual cost which is paid in a day to a person, and amount is more than 10,000 and paid by way of any mode other than prescribed mode, will not be allowed here also. Proviso to 43(1) applicable here also, sir. Here also. Done, sir. Now, if you are claiming 10AA for that business, don't claim 35D. If for that business you are claiming 80IA to RRB, don't claim 35D. Hello, sir. Don't claim 35D. Then you will be able to claim 10AA. Don't claim 35D. Then you will be able to claim 80IA to RRB. Meaning double benefit for the single business is not available. Take any one benefit for that business. Getting my point? Wait, sir. I have another business. I am doing another business. For that business, I can claim 10AA. And for this business, I can claim 35D. Then it is allowed. For the same business, 35AD is also available. And for that same business, 10AA is also. You have to choose between these two. Getting my point? Same assessee can claim 10AA for different business. 80IA, IB, 80IA to RRB for different business. Hello? And for the specified business, he can claim, other specified business, he can claim 35. This restriction is for same business. If all these benefits are available, claim only one benefit. Claim 35AD for this business. Then for this business, will not allow 10AA or 80IA to RRB for this business. If you are claiming 80IA to RRB or 10AA for this business, then for this business, 35AD will not be available. Getting my point? Sure, sir. Shall I move ahead? Very good, sir. Proviso to 43(1) done. Books of accounts, maintain an audit done. Such business shall not be formed by splitting up or reconstruction of any business already in existence. The operations of such business shall commence afresh. I've already told you. Hotel 3, if Y Limited will start, then only Y Limited will get what? The 35AD deduction for Hotel 3, but not for Hotel 1. That was the business started by the assessee, Y Limited, by splitting of the already existing business of X Limited. Getting my point? Or reconstruction. Next one, operations of such business shall commence by installing new plant and machinery. They are saying new assets? No, new plant and machinery. Assets, any other asset, second hand or something like that is okay. But the plant and machinery which you are installing in the business, to commence the operations of this business must be new plant and machinery. With this new plant and machinery, the operations must be commenced. Yes or no? So, second-hand plant and machinery is allowed or not allowed? Firstly, if the entire plant and machinery is new, no, then it is very good. But if entire plant and machinery is not new, then second-hand is allowed. But that second-hand cannot be more than 20% of the total investment in new plant and machinery. Hello? And by the way, second-hand plant and machinery imported from outside India, used by some other person, now used for the first time by you in India. And for that, no deduction to that other party was allowed under the Income Tax Act. Then that second-hand plant and machinery for you, it is as good as new only. That will not be treated as second-hand. Getting my point? That is allowed. Then sir, now very, very, very important discussion. All the conditions, everything we have done. Okay, now? Now very, very, very important discussion. See, be very careful. Huh? SSE has used one asset. Any person. Now, asset is acquired for specified business A. So I'm giving my business a name. Okay, no? So that you understand the thing properly. What is the name of my business? Specified business A. So this is my business A, which is a specified business. For this business, I have acquired one asset. Okay. Now this business fulfills all the criteria of section 35AD. Meaning, for this business, I can take 35AD deduction also. All the conditions of 35AD are fulfilled. Not formed by splitting up, total investment in plant and machinery. Hello, second hand is not more than 20%, separate books are maintained, they are audited, all the conditions of 35AD are fulfilled. 10 AA or 35AD deduction, no, sorry, 10 AA or 80 IA to RRB deduction not taken. All the conditions which are prescribed to claim 35AD deductions are fulfilled by this business. Now for this business, if I am acquiring one asset, okay, the actual cost of that asset, meaning the capital expenditure, was 50 lakh rupees. How much? 50 lakh. And this actual cost of 50 lakhs I incurred in previous year 21-22. In 21-22, for this business, I had incurred a cost, actual cost of asset 50 lakhs. Now tell me, this 50 lakhs was already allowed under section 35 AD. Already allowed under section 35 AD in 21-22 only. Yes or no? So in 21-22, no, in 21-22, the government took a promise from me. Took a promise from me. Promise in which year? Promise in previous year 21-22 at the time of taking this deduction. So when I was taking this deduction under section 35 AD, that time only in 21-22, I was supposed to promise something to the government. What promise, you know? The asset which I have purchased for specified business A, the asset which I have purchased for specified business A, that asset will be used in that same business. Asset shall be used in same specified business for 8 years. Starting from 21-22. Yes or no? So 21-22, 1 year you have used. So 7 more years you are supposed to use. But for 8 years, the asset will remain in this business only, mothersware. Mother swear, I'll use this asset in that same business. Please give me deduction. You promised. Government took that promise that you will not take out this asset from this business. 8 years you will be using this asset in the same specified business A only. You said government promise. We all know promises are made to break only. What if you break this promise? This is a requirement. This promise was taken under section 35 AD subsection 7B. There is one section, 7A. My mistake, 7A. So under section 7A, 35 AD 7A, this promise was taken. 7 means 7 years, you know. Next 7 years and this year is total 8 years. So this year and next 7 years, meaning total 8 years. Getting my point? This promise you gave, only then that 35 AD deduction was allowed. Now 35 AD 7A, promise was broken in previous year 24-25. It cannot be broken in 2033-34 because by that time the asset is already used for 8 years or more. Hello? But within 8 years, can I say 21-22 first year? Second year is 22-23. Third year is 23-24. After 3 years, in the fourth year, 24-25, the promise is broken. Hello, sir. Can the promise be broken in 25-26? Yes. Can it be broken in 26-27? Yes. Can it be broken in 27-28? Yes. Can it be broken in 28-29? Yes. Till 28-29. Meaning that the asset should remain in the same business till 28-29. If you want to take out this asset from specified business, no, take it out after 28-29, but not till 28-29. Promise that from 21-22 till 28-29, meaning that till previous year 28-29, 21-22, 22-23, 23-24, 24-25, 25-26, 26-27, 27-28, 28-29. Till 28-29, this asset will remain in specified business A only. If you take that asset out of that specified business after 28-29, then there is no break of promise. Okay, no? But what if in 24-25 only, 24-25 only, you started using the above asset in business X, another business. Possible or not? We told you to use this asset bloody in business A only till 28-29. But what we are seeing, before 28-29 only, in 24-25, you have taken this asset out of what? Specified business A. Now you have started using that asset in another business, business X. Means the promise which you made under 35 AD 7A, now that promise is broken. If you do this, the promise is broken. Broken means now there will be 35 AD subsection 7B applicable on you. B for breaking the promise. 7B, B for breaking the promise. So if the promise is broken, 7B will get attracted. Hello, sir. Now what 7B says, we told you, not to take out this asset from your specified business till 28-29. Why did you take it out? Do one thing. Whatever actual cost of such asset which was already allowed under section 35 AD, how much was that? 50 lakhs, no? Hello? Now that entire amount will be reversed. The amount which we allowed from your specified business A will now be treated as your income of specified business A. Because you have broken the promise. We will consider this amount as your deemed PGBP income. But wait, this entire amount will consider your deemed PGBP income, no? Then it will be unnecessary hardship to you. Do one thing. Out of this amount, no, reduce the depreciation for those 3 years for which it was used for specified business. Because if we would not have allowed that 50 lakhs fully in 21-22, definitely for 21-22, we would have given the depreciation on 50 lakhs. Hello? 22-23 also we would have given the depreciation. And 23-24 also we would have given the depreciation. Yes or no? So for how many years the asset was used in specified business? 3 years, no? Prior to 24-25, when it was brought to business X, prior to that till 23-24, it was used in specified business from 21-22, 22-23 and 23-24. These 3 years, we would have given the depreciation out of 50 lakhs. We would have allowed some cost in the form of depreciation. No. Reduce that amount. So reduce the amount of depreciation which you will calculate on a notional basis. Notional basis. Nationally, no, it is notionally. Notionally means imaginary amount of depreciation. Yes or no? Amount of depreciation notionally for the period for which such asset was actually used in what? Specified business. So it was used in specified business from previous year 21-22 to previous year 23-24. For these many years, depreciation you are supposed to calculate on that 50 lakhs. Now assume that it was a building. What asset was there? 50 lakh. It was a building. Got it? No? The rate of depreciation is 10%. If the 50 lakh was not allowed fully, then this building would have been formed part of the block. Hello, sir. First year, 50 lakh, 10% would have been allowed. 5 lakh. Second year, the WDV would have been 45 lakhs. On that, 4.5 lakhs would have been allowed. Hello, sir. And third year, how much? Calculate. 45 lakhs minus 4.5 lakhs will give you 40 lakh 50,000. Hello. On that 10%, 4 lakh 5,000. Getting my point? So first year 5 lakh, second year 4 lakh 50,000 and third year 4 lakh 5,000. How much was the total depreciation? Come on, tell me. 13 lakh 55,000. Sure, everyone? So that 13 lakh 55,000 out of that cost of 50 lakhs we would have allowed in these 3 years in the form of depreciation only, no? Reduce that amount, reduce that amount out of the 50 lakhs which we allowed under section 35AD. The amount which we allowed under section 35AD was 50 lakhs. If we would not have allowed this amount under 35AD, that means out of that 50 only we would have allowed this 13 lakh 55,000 in the form of depreciation in the last 3 years. Then how much amount extra? 36 lakh 45,000. This amount out of that 50 lakhs which we allowed under section 35AD, out of that 50 lakhs, this amount will now be your deemed PGBP income of your business A from where this amount was allowed. So now you are going to show this amount as your deemed PGBP income of business A from where this amount was claimed as a deduction. Getting my point, everyone? Sure. Where it is written that this will be deemed PGBP income of business A, 36,45,000 will be deemed PGBP. It is written in 3587B. Since you broke the promise, 3587B is punishing you. What punishment it is giving you? That actual cost which was allowed for that asset. That actual cost is treated as your deemed PGBP. But not fully. After giving you the benefit of that depreciation, which you would have claimed if this 50 was not allowed, and you would have claimed the depreciation on that amount. Hello. For the period for which it was used in that specified business. If this cost was allowed in the form of depreciation, you would have already claimed how much cost? Out of 50, you would have already claimed 13,55,000. No, that we are eliminating. Assume that it is allowed in the form of depreciation out of your specified business. Yes or no? But whatever remains, that you claimed extra from us, from your specified business. Now this you show as your deemed PGBP income in business A. Now tell me, where is this asset? In 24-25, in the year, sir, in the year 24-25, 35 AD subsection 7B getting applicable. So in the year 24-25, for your business A, this amount will be taxable, no friends? So business A, 24-25, how much taxable amount deemed PGBP now? 36,45,000. Sure. Now in 24-25, where is this asset? It has left you, gone outside, or it is still with you? It is still with you. Where is that asset? Now that asset is in your business X. Now in 24-25, what will happen? You know, in 24-25, in your business A, what did I say? In 24-25, in your business A, you will show this amount as your deemed PGBP income. But in that same year, in your business X, now the asset will come. Hello? Now in business X, the asset is coming. You are taking the asset out of business A in 24-25 and now taking this asset in your business X, another business. It will be added to the block of building. Hello? Because it was a building which was used in specified business. Now that building is being used in business X. So business X will already have a block of business. In that, block of buildings. In that block of buildings, this building brought from specified business will be added now. Additions to the block. So for this business X, this building which is coming, the above asset, which is now used in this building, now used in this business, above asset, what will be the actual cost of this? No. 50 lakhs got allowed in business A. Out of that, 13,55,000 depreciation gone. Balance 36,45,000 cost reversed in PGBP for that business. Now that cost only you take as the cost of this asset for the new business. Because now the asset is going to be used in this business, no? So whatever remaining cost of that asset which was considered as what? Deemed PGBP in your business A, no. 50 lakh was first allowed. Then 50 lakh reversed. But entire 50 not reversed. Depreciation was allowed. Meaning out of 50, this cost is reversed by treating a deemed PGBP in business A, no? So this is still the cost of that building. Now if that building is going to be used in new business, what should be the cost of this building? Entire amount was allowed. But out of that, some amount is already considered as your deemed PGBP. No. Now the amount which was considered as your deemed PGBP, no, that same amount you take as actual cost. 36,45,000, sir. This is what? This is as per proviso to explanation 13 to section 43(1). This I did not tell you that time, which I am telling you right now. I have not yet discussed explanation 13. But to that explanation number 13, this is the proviso. Explanation 13 to section 43(1). Actual cost. Do you remember? In this situation, what will be the cost of the asset? What will be the cost of the asset? Tell me. Explanation 13. What will be the cost of the asset? That is something else. But if explanation 13 has a proviso also, which says that if there was an asset which was used for specified business, hello, for which the cost was allowed under section 35AD, within 8 years, if you are bringing that asset, you are withdrawing that asset from specified business and you are bringing that asset in your business now. Hello, sir. So this asset was not bought for this business. This was bought for specified business. It was supposed to be used in that specified business for 8 years. But within that 8 years, it was taken out from that business. And now you are bringing that asset in your business. Business X. So in business X, whenever you will bring such type of asset from specified business within 8 years, what will be the cost of this asset in business X? It will be the same amount which was considered as deemed PGBP income under section 35AD 7B. That same amount you will take as a cost of this asset now in your business X. Understanding? And this amount will only be allowed in the form of depreciation from business X income. Out of 50, for the first 3 years, depreciation got allowed in specified business. Whatever cost remained, you deemed it as PGBP income in business A. Now bring that amount as a cost. Where? In business X, where the asset is now being used. Now this cost you claim from business X income in the form of what? Depreciation. But for that, this amount should be first treated as actual cost, no, in business A. Business X. Getting my point, everyone? Understanding? So in your business X, that same amount which was considered under specified business as what? As deemed PGBP income, that same amount will now be taken as actual cost over here. This is written in proviso to explanation 13. Now this amount shall be allowed as depreciation from business X income of business X. From that income of business X, now this cost will be allowed in the form of depreciation. So now what happened? 50 lakh we gave you the deduction, no? First time, 21-22. Out of that 3 years depreciation got allowed in specified business. Hello. Balance 36 lakh deemed as PGBP income in business A. So out of 50, 36 lakh cost reversed, no? First allowed, then reversed. Now this cost, no? Why we are reversing there, Because this cost will be now allowed as a deduction in the form of depreciation from the income of business X. Getting my point? But for that, it should be first made as a deemed PGBP income over there. 7B got applicable. Hello? Got it? Now see, what promise you did? 7 years, no? So asset was acquired in 21-22. Till 28-29. The asset was supposed to be there in the same business. So if you break the promise, meaning 24-25, asset is used in another business, then only 35 AD subsection 7B is applicable. Then only it is applicable. Understanding what I am trying to tell you? But pay attention now. Wait, wait. No need to unmute. It was by mistake. Pay attention what I am trying to tell you. What if from 21, 22 till 28, 29, the asset was used in specified business only? Did you break your promise? No. Within this period, you did not use the asset for any other business. You exactly used. Meaning that for this 8 years, the asset was used in specified business A only. In this business only, the asset was used. Meaning that 7B will now not be applicable. Sure, no, sure, no. Now, till 28, 29 it was used. Now what is happening, In 29, 23, sorry, 29, 30. In this year, meaning after 8 years are over. What did I say? After 8 years are over. Now 29, 30, the asset started using in business X. Possible or not? Within 8 years, then broken the promise. Then whatever discussion is there, we have already done. Hello? But after 8 years, did you break your promise? Did you break your promise? No. After 8 years only, you are taking asset out of your specified business, and now you have started using that asset for your other business. Still the asset is with you. Earlier it was in specified business A, now taken out after 8 years. Now that asset is there in your business X. Now the proviso to explanation 13 to section 43 will not be applicable. Why? Because 35AD7B was not made applicable. Hello? 35AD7B not made applicable. So this proviso not applicable. Getting my point? So in business X, now when the asset will come, will this asset be added to block in the business X? Yes. At what cost? Now Kaushik, you say, what you said earlier was correct now. Nil. Because entire 50 lakhs we have allowed in specified business. Hello? Nothing out of that got reversed. Entire amount we have allowed there. And after 8 years, now you are bringing this asset to some other business. In that some other business, the actual cost of this asset will be taken as nil. This is given in explanation number 13 to section 43(1). But don't take this cost as nil. Hello, don't take this cost as nil. If within 8 years you started using for other business, because that time 35AD7B will be applicable. Whatever amount as per 35AD7B you considered as deemed PGBP income, then you take that amount as actual cost. Otherwise, you have to take actual cost as nil only. Got it? Explanation 13 to section 43(1) and proviso to explanation 13. Got it? Sure? So after this, we are going to continue tomorrow. Okay? Bye-bye. 35 is over. Small part is remaining, small part, but that is going to take some time, 15-20 minutes time. I don't want to extend more. Okay? So we are going to meet tomorrow. Tomorrow we are finishing this. We are going to start with the balance part. Okay? And we are going to solve 2-3 questions on 35AD. Good questions are there. Okay? So please revise the thing today and we are meeting tomorrow. Bye-bye.